So some fixed rate mortgage holders who have to review, as well as variable rate mortgage holders, are seeing a big increase in payments. What are you hearing from clients?
Well, on an interest rate basis, the basis almost double. If you had a 3.29 mortgage 5 years ago and you're coming into a 6.19 mortgage today, that's nearly a clean double in rate, and the payments would go up probably about 25 or 35%. So it's very significant.
Very significant. So what are people doing? Are they reaching out to their banks? What are you hearing?
Well, in some cases, people don't know what they can do. However, they should be aware that they can contact their lender. And first of all, they can shop around, but they can contact their lender and say, hey, how about extending amortization? I'm down to 20-year amortization. I don't think I can handle this payment. Can I possibly increase the mortgage to 30-year amortization, which will reduce my payment? So there are strategies that they can use, and hopefully they'll make those calls.
What advice would you give homeowners who are facing renewal? You say shop around. What can they do?
Well, anytime up to 90 days in advance of your renewal, you can get rate holds from other organizations, other banks, other lenders. You can talk to mortgage brokers, talk to bank representatives, and you can source the best possible outcome because in reality, at the point of renewal, you can switch to another organization at effectively zero cost to transfer. So it's always today, more than ever before, it's key to shop.
Are you hearing of people missing payments or living in fear of missing a payment, Ron?
Well, we have very strong default rate in Canada. It's still only about 15 basis points, which is really far below other countries, and that hasn't changed yet. But here's what we're hearing. People dipping into their lines of credit, people finding other means to make the payments. I believe TransUnion, the big credit bureau, published a report just last week that people seem to be dipping into credit facilities in order to make basic payments. And that's concerning.
Right, and it's not just your mortgage payment that's going to go up, it's your credit cards, everything else, your car payment.
Oh, yeah, it's across the board. That's affected by bank crime, whether it's a home equity line of credit, which, by the way, has more than doubled over the last 15 months. And those payments, they are not amortizing. So those payments actually jump directly in relationship to the change of the change in the rate. So if you started at 2.95 15 months ago, you're at 7.7 now,
Oof.
and that's nearly a 250% increase in what you're paying.
Wow. Ron, thanks so much. Ron Butler is a mortgage broker.